Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 26th of the 3rd, 2021. The time is 0455 GMT, Asian session coming to a close, European session firing up, our lunchtime US American session. Right, yesterday Thursday the 25th we had a positive opposed driver in the pound at plus 225, front and back door flows, mainly going out of the yen at minus 160, out of the euro at minus 113, and the dollar was the positive rock at plus 48. Activity plus or minus 273. Intra-week then, this is the most relevant because we're Friday. This was from Monday the 22nd open to about 15 minutes ago. We've got a positive unopposed driver in the dollar at plus 235. No backdoor flows. The opposing negative flows mainly coming out of the euro at minus 149. Out of the pound at minus 65, and the yen was the negative rock at minus 21. Activity plus or minus 235. So therefore, over the week, then we've had dollar strength to the exception of all else, really. Intraday, then, so this is from today, the Asian session to about 15 minutes ago. We've got a positive opposed driver in the pound plus 71. Front and back door flows mainly out of the yen at minus 69, out of the dollar at minus 38, and the euro was the positive rock at plus 36. Activity plus or minus 107. This is classic ramping up, risk on. You've got the yen weakest, dollar next, and the euro and the pound in the positive. Right, what's going to knock it about then? Well, today we've got mainly or only tier 2 data as far as we're concerned. We've got GBP retail sales, German business climate data, US CPI, and Michigan consumer sentiment, all tier 2 on our definition. Right, China basically set the onshore yuan, or however you say it, was set at the weakest since January. So they're making sure that the exchange rate isn't going to get in the way of their GDP growth. The oil market is interesting on two counts. The ship is still wedged. We thought they'd clear that sooner. If it goes on, it could start to put upward pressure on oil. And we've got an OPEC meeting next week on the 1st of the new month, 1st of April. Right, so let's look at the flows and the asset classes. See what's going on. Our trades are now at about 2,600 to 700 points profit. We added to short New Zealand positions yesterday. Right, euro then. So this is the euro complex, the large euro complex, 7 pairs. It's down except against the dollar, the yen, and the Swiss. And this is classic risk off, risk on, sorry. Weak dollar, weak yen, weak Swiss. Right, the yen is weak across the board. The pound is strong, except against the CAD, the AUD, and the NZD. Also classic risk on. Strength in the commodity currencies. The Swiss is weak across the board, again risk off. CAD is strong except against the AUD and the NZD. The AUD is strong across the board. The NZD is strong except against the AUD, which is stronger, and the dollar is weak except against the yen and the Swiss, which are weaker. Right, so we've got yen weakness, we've got Swiss franc weakness, and we've got AUD strength across the board. and all this is really shouting risk on. Okay, everybody's manoeuvring, and yet the risk on hasn't happened yet, but it will. So something to bear in mind. Right. Let's just look at the asset classes and then we'll make some final sense of what's going on. Right, dollar index then. US dollar index. What we got? Basically it broke the high, it broke that high, and it's come back still above the previous high. So the dollar index is still strong, but you're likely to see a fall off in the dollar. Right, gold. Gold will be interesting to watch, because if we get a sustained fall in gold's operating at 0.2 from the floor. If we get a sustained fall in the dollar, we're likely to see a ramp up in gold. Oil, remember, oil came up and then it's operating at about 0.4 from the high. Remember, we've got this Suez ship and the OPEC meeting with regards gold. So Wall Street then, basically it beat the high quite easily. It came back to the previous, and it's now about there. It's about 1.25 from the high, modelled high. That's about an eighth. S&P, what have we got? It broke the high, not so well, but it did, and it's now sub. Now the tech never broke the high, and it's operating now at 0.4 from the floor. So the tech's still underperforming. US 10-year, which is bonds and the bund. US 10-year is basically 0.33 from the floor. This is the price, so the yields are inverted, and the bund is about 0.6 from the floor. So you can see that the European yields are weaker than the dollar yields, US yields, and therefore that will have a bearing on the euro dollar. What have we got? Copper. Copper, you had this 1, 2, 3, 4, 5 pumps. It came back to the second pump. It went back to base camp. It messed about, and it's now operating at 1.75 on the pumps. So it's weak still. And the final one is US steel, which you can see that they sold it off at the double top, and it's now operating at about 0.5 from the high or the low. And yesterday it was 0.6. It was lower, so it was 0.4 from the low. Right, let's just clear that, and let's just make some final comments. Right, so yesterday the market was gearing up for risk on. Sorry, I keep saying it wrong around. Risk on. We've got a lot of evidence. We've got this yen weakness. We've got this sort of situation. Euro pound. We've got strength in the commodity currencies, the CAD, the AUD, and the NZD. We've got weakness in the yen, the Swiss, and presumably we're going to get weakness in the dollar. Those are going to be the transmissions. We're positioned long AUD dollar. So we're long AUD dollar, which has struggled. It hasn't really happened because of the strength of the dollar, but it will do. We're short NZD against the euro, the pound, the CAD, and the AUD. The euro's sticky at the moment because it's being used as the weakest currency to a certain extent. The pound is in limbo at the moment until we get the data out. But all these are going to be punching against the NZD, which is as a complex is is ultimately too high for its own good. It's 67% of the modelled in the modelled cycle. So we're going to be sticking long. We've added to our short NZD positions, and so we're about plus 2,700 points profit overall. So I hope that was useful. We've got the weekend review and the weekend data cycle review. If not, see you for the Monday morning daily briefing. Thank you very much.